Curious about crypto but not sure where to begin? Crypto index investing could be the ideal solution. It's a smarter, more balanced way to join the digital currency market without needing to track individual coins.
In this video, you'll learn exactly what crypto index investment is, how it works, and how to get started. If you're looking for a simplified and less risky way to grow in crypto, this could be your perfect entry point.
What is crypto index investment? Crypto index investment is a hands-off strategy where you invest in a fund that mirrors the performance of a group of cryptocurrencies. Think of it like investing in a stock index, such as the S&P 500, but for crypto. Instead of buying Bitcoin, Ethereum, or Solana one by one, you're investing in a bundle that follows a preset formula or theme. This method is designed to reduce risk by spreading your money across multiple coins, helping you avoid the pain of betting everything on one asset. It also cuts down on the complexity and time required to manage a crypto portfolio. If you're looking for a smarter and less stressful way to be part of the crypto revolution, index investing gives you exposure to the market's growth potential with more stability and less pressure to micromanage every move. How does a crypto index fund work? A crypto index fund works by pooling money from multiple investors and then buying a set of cryptocurrencies based on an index, like the top 10 by market cap. These funds are structured to reflect the broader crypto market or a specific segment of it. Instead of you juggling wallets and exchanges, the fund takes care of buying, storing, and rebalancing assets. Managers follow set rules to decide which coins are included, based on things like trading volume or market size. This approach automatically spreads your investment across several assets, helping to balance out gains and losses. The fund gets rebalanced periodically, meaning it updates holdings to keep aligned with the index. This gives investors consistent exposure without needing to make constant adjustments themselves. If you're not a full-time crypto trader but still want in on the action, index funds let you invest with minimal hassle and professional oversight. Benefits of investing in crypto index funds. Crypto index funds come with several appealing benefits. One major advantage is diversification. It spreads your money across several cryptocurrencies instead of relying on one coin. This reduces the risk of big losses. These funds are also beginner-friendly, requiring little to no technical know-how. Most are managed automatically, saving you time and avoiding emotional trades. Fees are often lower than actively managed funds, which helps keep more of your profits. Index funds also offer a passive investment style, which means less stress and more stability. For anyone looking to invest in crypto without getting overwhelmed, index funds are a reliable entry point. Types of crypto indices you can invest in. There's a wide variety of crypto indices, each designed for different goals. Some follow the biggest coins by market cap, like Bitcoin and Ethereum, giving you exposure to the crypto giants. Others focus on niche sectors like DeFi, NFTs, or Layer 1 technologies. Some are designed to target promising altcoins or new innovations, offering higher risk and reward. These indices may use automated algorithms or human oversight to decide which coins to include. Understanding how an index is built helps you choose the right one for your goals. Pick based on your interest, risk level, and how long you plan to invest. How to start investing in crypto index funds? Getting started with crypto index funds is straightforward. First, choose a platform or provider that offers access to index products. This could be through dedicated services like Bitwise or exchanges that offer crypto-based ETFs. After creating an account and completing identity verification, decide how much money to invest. Purchase fund shares like you would buy stocks. Check for fees, past performance, and minimum investment requirements. It's wise to set long-term goals, as crypto markets can be volatile. Keep track of how the fund performs over time, but you won't need to make daily decisions like in direct trading. Risks and considerations in crypto index investing. While crypto index funds are safer than picking individual coins, they're not risk-free. Crypto markets are volatile, so even diversified portfolios can swing sharply in value. Some coins in the index may underperform, affecting your total returns. Management fees, although usually lower, still eat into profits. Regulatory uncertainty is another concern, as crypto laws vary across countries and may change. Index funds also depend on the stability and trustworthiness of their providers. Always research carefully before investing. Know your risk tolerance and never put in money you can't afford to lose. Balanced caution can protect your financial future. Difference between crypto index funds and ETFs. Crypto index funds and ETFs both aim to give investors broad exposure to digital currencies, but they differ in how they're traded. Index funds are typically mutual funds, priced and traded once daily based on the value of their assets. Etfs, on the other hand, trade on stock exchanges throughout the day, like regular stocks. This makes ETFs more flexible and easier to buy or sell at any time. However, ETFs may have slightly different fees or regulations depending on your location. Understanding the structure of your chosen product helps you pick the best option for your investment style. Tax implications of crypto index investment. Taxes on crypto index investments can vary widely depending on your country. In many places, selling your fund shares at a profit means paying capital gains tax. Some jurisdictions may offer lower rates for long-term holdings, while others tax crypto gains as income. Accurate record keeping is essential. Note when and how much you invested, and the value at the time of sale. Some platforms offer tax summaries to help you during filing season. Still, consulting a tax professional who understands crypto laws is highly recommended. Planning ahead will keep you compliant and possibly help you reduce your tax burden. Future outlook of crypto index investment. The future looks promising for crypto index investing as the digital asset space becomes more structured. More investors, including big institutions, are looking for safer ways to enter the market, and index funds are filling that role. We're seeing growth in decentralized versions of these funds and an increase in global crypto ETFs. Better regulation is expected, helping investors feel more secure. Emerging sectors like Web3, the metaverse, and AI-driven tokens could shape future indices. This means even more targeted investment opportunities. Staying flexible and well-informed will help investors take advantage of this evolving and potentially rewarding investment trend. Tips for maximizing returns in crypto index investing. To get the best returns, use a consistent investment strategy like dollar-cost averaging, investing the same amount regularly regardless of price. Choose funds with transparent rules and low fees, as this helps preserve profits. Keep an eye on your portfolio, but don't overreact to daily price swings. Rebalancing occasionally ensures your investment stays aligned with your goals. You might also consider spreading your money across different types of crypto indices. This adds another layer of diversification. Most importantly, be patient. The crypto market rewards long-term thinking far more than quick flips. Avoid panic selling and let time work in your favor. Crypto index investing is a practical, beginner-friendly way to explore digital currencies without diving into the complexity of managing each one. By focusing on diversified exposure, clear strategies, and risk awareness, you can confidently navigate the crypto world. Whether you're new to investing or looking to simplify your crypto journey, index funds offer a smart starting point. Stay informed, stick to your plan, and let your investments grow over time. Got questions or insights to share? Drop them in the comments. We'd love to hear from you. Don't forget to like, share, and subscribe to our channel for more informative content.